Hey, good afternoon, and welcome to today's live market update. I'm Marcus Sturman Sr., and we're navigating one of the most complex geopolitical landscapes in years. The conflict in Iran continuing to restrict the Strait of Hormuz. Oil has breached well over $100 mark, sending shockwaves throughout the global supply chain. Today, with Mr. Stephen Davenport, we're going to break down what some of these things, maybe some stagflationary threats, mean to your portfolio. And I don't know if you were here last month when we met, but Mr. Stephen said he saw 10% downside in the market. So I don't know if he meant for that to happen in a month, but we're definitely on the way to that. So we're seeing cracks inside of the S&P, the Dow, liquidity in private equity and private credit, just to name a few. But so happy to have you back here with me again, Mr. Stephen. Let's just jump right in. How have you been?
Again, I'm Steve Davenport with Circa Capital, and I'm happy here to be with Marcus. And I enjoy going through what's happening in the markets and what's happening in the world. I think we have become somebody asked me, is this like the 70s? Should we go back to what happened when the Strait was last shut? And I look at the world and I say it's a completely different world, because I think of where China was in 73. Their economy was small relative to the global economy. When I look at where energy was in the US, we were importing, I think, 30 to 40% of our oil requirements. So we were dependent on the Middle East. And now I look at, with shale and everything else that's happened in the US, we've got vast natural gas and oil resources that are being developed. And I think we're in a position where we're probably one of the better positioned countries in the world. And I think with this AI boom, it's causing us to look even harder at our energy and say, okay, we probably need to keep nuclear. We probably need to do more on solar and hydro. And I feel, although this wind recently with Trump shutting down some of the wind farms has been a negative, I think what it brings to light is it's another source. And when we figure out how we want to organize this and have the problem with the U.S. market, Marcus, is that we are very much a capitalistic economy. We move and react to whatever the demand is at the current time. A lot of countries have energy policies that go out 10, 20, 30 years, and they have plans. Germany had a plan to get out of all of its nuclear and to, use more nat gas, but also try to use more solar and other things. And guess what? The Ukraine came along and that plan went out the window. So this time in our lives is probably another time where we're going to have to ask some hard questions about energy and what our future looks like and where do we want it to be. I believe that we're moving more and more towards nat gas as a replacement for coal and oil, and I think that will take 15, 20 years. But I also believe that there could be some developments in the solar space and in the battery storage space that could change that. And I think what's going on with AI is pushing the limits of that, because they don't want to be on a grid where they depend on some central. And so you see these different AI servers farms, and they're going to be completely autonomous. They're going to have their own source of nuclear or solar and they're going to try to operate independently of the grid so that they don't depend and have, their AI technology down during critical periods because of a hurricane or a hailstorm. It's really a very different time than 73, where we were just getting in line to fill up our cars and we would burn as much gas as we would put in the engine, filling up the cars. And it was crazy. We had gas guzzlers. I mean, think of all the things that had changed since the 70s. But then look at the Middle East and say, has it changed? Have we gotten clarity as to how we operate and how things are going to work in the Middle East? I would kind of say that we know more, but I don't think we're more advanced in our relationships in the Middle East. And this violence is kind of bringing that point home. You would think that Iran would say, no mas. I don't want any more of this. But I think they realize that they can control the country with the guard, and they can keep their religious leadership, even if it's like the snake. When you knock off a head, 3 more grow back. I think it's Phaedra, right? Was the Greek god who had the ability to grow back more and more heads. I don't believe that we're really used to dealing with Middle Eastern governments, and I don't think we've made necessarily an optimal partner with Israel here. I mean, how do you feel about this war and Israel kind of pushing us into it without really a plan or an idea of what's right or wrong in terms of what we should do?
I feel like the war that we're in right now. I mean, if you recall, last time we spoke, it was literally the day before. Like later that night, they launched Operation Fury. We were talking about the war and the duration as to how it might impact markets. And first of all, obviously, the loss of life is great and tragic. That's a tragic thing. All the people whose lives are disrupted and lost, that's a terrible thing. As far as from the market perspective, I feel like the war has had a lot of mixed messaging coming out as to what the objectives have been from the beginning, as to the time frame. First it was going to be just a few weeks, but we're kind of right at that 4 week window right now, so we'll see if that reaches 4 weeks. We're kind of at that point. It seems to have a lot, obviously, to do with oil. I don't know if people really realize that like oil makes the world go round. We cut off the Venezuelan oil, which is a lot of oil to, I don't want to say our enemies, but not necessarily our allies. That was a source of them getting oil over in the other parts of the world. Then when we go into conflict in the Gulf over there, you have another point that's choked off with oil, but it's kind of impacting some of our allies this time. But as you mentioned, America is pretty much oil independent right now. We supply a lot of oil. We went into this situation, as you mentioned before, in totally different place as we were in the 70s. I do think that we have learned to talk with the Middle East a little bit better since the 70s. I mean, we negotiated, I guess you call it negotiations with Iraq until that didn't work, but that was more of their own doing. I think at the beginning when they were trying to take over Kuwait, once again, oil, right? You go back to Iran and you look at the Contra stuff. I guess that was South America, but it all ties back to like the 80s. We were in the Middle East then, Afghanistan, Taliban back then. So we're intertwined with all this stuff. We've negotiated. I just don't know if we've negotiated well with these regimes. And even as recently as last year, we saw a lot of announced investments from Middle Eastern countries. I don't know how much they actually input into America, into data centers and AI and things of that nature. So I don't know. I will say that maybe we haven't improved our communications with the Middle East, but we have had more communications with the Middle East. So the messaging, as far as the war goes, that seems to be one of the big things because it's so dynamic, so topsy turvy, and that makes it hard with investing right now. So it's pretty much if oil goes up, stocks are going down for right now. That's the simple part of it.
Yeah, I mean, I think that we've learned that oil and fuel, like we talked about before we started, that the impact on some of the products of fertilizer and other parts of the world economies. They provide 40% of the fertilizer to Africa and Asia. And you think about India and some of these countries and what that means to their food production. And you think about, no, the U.S. had 60% of its strategic reserves filled. It had been up to 80, but Biden released it at various times, so it's down to 60. And Trump's strategy, instead of saying, I'm going to fill up the reserve, was, hey, I'm going to disrupt Iran's control of oil, and therefore we'll have a better price for oil for everyone, and then we'll fill it up to the top at a lower price. Well, that's probably going to see it go down and again before it goes back up. And when you look at it, 170 million barrels is a lot of oil. It's still, in the U.S. economy is so big now, and there's going to be more demand from AI. I'm not sure how the strategic reserves should be managed, but I look at a country like India that doesn't have any strategic reserves. So you look at that and you say, they really are waiting for those ships to get through the strait in order to relieve an immediate need. And I look at how we all think about all of these countries sitting around the table at the G10 or at the G40 and think about all of them have countries that have people who are dealing with all kinds of issues. But the U.S. really is a leader in this space and has to be considered, for how it impacts and makes decisions. This decision to go into, Iran was, in my mind, too short-sighted and not really clear with an objective. And I think that then you can declare victory easier if you can move your objective around. But I look at this as really a danger to Israel and not a danger to the U.S. They don't have the rocket capability to get any of this nuclear and to us and impacting us. They had the distance to get it to Israel. And when we look at it and listen to Tulsi Gabbard, she says there was no enrichment going on. So it really, this story has to be sorted out in order for us to figure out what type of a problem we have and how long do we think this will last. I think the original goal was 4 to 6 weeks. I think that Trump would love to, you take the 10 days from today that he's extended the deadline. That would put it almost exactly at 6 weeks. And I think that that would get it resolved before Trump meets with Xi in China. So I'd still say that's the base case. But the other things like adding 10,000 more troops, and maybe their assignment is to, take out any of the weapons that are on the side of Iran, in the Strait, and in doing that, open up the Strait for everyone. That could work, or it could be one of those missions that it doesn't look like that it's easy to land there. It doesn't look like it's going to be very easy to go through the hills and the mountains to find some of these locations of these weapons. And I always wonder, Iran has been very good about building these tunnels for their nuclear. And I just wonder if you're very good at tunneling, well, that would be a real good way to move your weapons along that area along the strait. So I think there's more we don't know about this than we do. I think it's a little bit wishful now to say it will be done in 2 weeks, but that's what the market is saying in the base case. And so if the U.S. bombs the energy facilities of Iran, and that causes Iran to really have almost, and they're also talking about desalinization. If you desalinate, take out those resources for energy transfer and desalinization, you make Iran uninhabitable for the summertime. In the summer, they're going to see heats of 130. So part of the reason why we're doing this now, I think I would argue, is because we're afraid of operating on the ground there in the summertime. I don't think it's possible. Nobody's done that before. And when we look at the whole process, it really is very much of uncharted territory. So therefore, I look at this and say, we're probably going to have oil prices higher for longer. And I think that makes the possibility of a recession higher. And I think with the other things going on, with AI being overpriced, with private credit potentially erupting into more failures, these things, I think, combine and create a very bad brew for us to swallow over the next 2 or 3 months. So I'm a little bit more than skeptical. I'd say I've dropped into the cynical bucket.
Goodness, down to cynical. That's from your a normal skeptic down to a cynical level. That's saying something. I just want to note that I'm pretty sure that Iran shot a missile that went like 2,600 miles the other day. So like they can't hit America, but they do definitely have more capabilities than I think we realize. It appears that the intelligence we have, some of the intelligence is really outdated. Like if you take that school bombing, for instance. That was data from like 2016, and it was supposed to be a weapons facility. I don't know. But it seems like to take troops into Iran would be a major escalation, right? As you mentioned, and it would definitely drop oil prices higher and extend this conflict much longer. But we do have close to 10,000 troops on the water right now headed that way, or at least that's what we say. Our administration does move kind of, under the shadows, I guess. They don't really put their moves out. Maybe that's tactical, or maybe they just don't know what they're doing with it. But either way it goes, if this pushes oil prices up, because you mentioned in your notes, I know I've seen inflation expectations going up to 4% real soon. You put 5, maybe 6% inflation. You want to walk into that? How do you get to those numbers?
I'm saying I think that we're going to see some of the problems with fertilizer and some of the other things go through to our food. I also think that our immigration policy has caused some labor inflation that I don't think is going to get any better. I think we're still haven't resolved the immigration question. And I also think that this shutdown is going to, ultimately be inflationary, because I think it's going to be harder for us to operate and travel. And those things are going to make it more difficult and more expensive. So I'm not sure that we can get through this without a recession. I'm not sure it wouldn't be, I'm a big believer in, it is cleansing for the economy to have a recession and have some things fail so that we can then rebuild well. When we do these things and we don't have a recession and everybody just gets funded for a little longer and the business continues to operate, but they operate with damaged balance sheets, that doesn't really help in the long run. We believe it's helping to prevent some of these recessions, but I would argue that there are healthy part of the process. And what they do is they cleanse the people who can't survive and they help the companies that do survive. And I think that right now, with private credit the way it is, I think these people wouldn't be in the credit space looking for funding unless they had some problems. And I think that the fact that they might be double collateralized or doing things that are less good for the company and the economy because they want to try to survive, I think this is where we need more information. And I don't think we have any clarity, which is why I've always hesitated about trying to compare private credit score and private credit investments to regular corporate investments where you have a lot more clarity and you understand the counterparties a lot better. I don't think this is a single storm. I think this is a storm that's going to hit us from a few different ways. Look at the wealth effect. 10% down on our equities, it's already a pretty significant event. And the war itself has cost us, I've seen different estimates, but $100 billion seems like about right now. And if you're bringing in 10,000 more troops, the cost isn't going up per day. The cost isn't going down per day, it's going up. I don't know, how do you feel about the R word? Are you starting to talk about it with your clients? How do your clients feel if there was a recession? Do you think we're prepared?
Honestly, when it comes to recession, I mean, so people realize they're living through recessions, right? But they don't realize they're living through recessions when they're happening, right? Like people feel it when they go to the gas pump or when they go to buy things. Like your money's just not buying as much anymore. People around you see people are losing jobs. You see unemployment signs. You know what I mean? Less hiring, less activity going around. And you feel inflation, like I said. So you feel the recession. You feel the GDP slowing down. You feel unemployment going up. You just see it. Maybe you don't recognize it. I feel like maybe we might already be in the beginning of a light one. I think we've seen I think we've seen recessions in certain sectors already. Like we've had rolling recessions that have been happening for a while. Like this is a really long economic cycle that we've been in. It's been a huge part for growth, right? Like 3 years just growth. Even if you look at the stock market, wherever you look at, inflation rose and it came back down, but now it's sticky. So when it comes to I think we're in a different type of market where as before 3% was the target, which still is, if you listen to the Fed, 3% is the target for inflation. But I think this economy is set to operate on at least at 4%. But as you mentioned, I think that we're going to go, especially in the short term, I worry about the March inflation numbers with the shock that we had to gas right at the beginning of the war. We haven't seen that data come through yet. So that number could be really high. And I just think the sentiment, which can lead to, right, because consumer sentiment can lead to the effects of maybe a recession or something in that. So recession isn't my base case. I'm still bullish on the U.S. economy, the global economy. I still think the second half of 2026 will be a pretty good time for returns. But right now, I think it's going to be volatile. And we could still see more pressure down.
Yeah, I think that Trump had this view that having a new Fed chairman was going to lead to lower rates, and lower rates were going to put him in a great position going into the midterm elections. And I would say that whole script has been rewritten. I think that you've seen the estimates for Fed cuts have gone from 3 to 1, and that 1 doesn't happen until almost December. When you look at that, I think you could see no cuts or a raise. I think that a raise now would clamp down on inflation, but it would also clamp down on the economy. And I think it would change the script of what we have. And I look at the last meeting, it was 11 to 1. It wasn't like it was 7-3 and we're going to get a new Fed chairman and Powell is going to go away and we're going to get a majority soon. 11 to 1, you add a new Fed chairman, but Powell stays on because of this whole investigation. You could see the majority finding something that the head of the chair wouldn't agree with. And I think what it's done is Trump has no understanding of unintended consequences. When he went after Cook, he thought, I'm going to intimidate her, she's going to resign, and I'm going to replace her with somebody who's good for me. Instead, she was the first African-American member of the Federal Reserve Board. She had a lot of pride. She had a lot of work that went into her career. She says no. And now Trump's going to, appeal that to the Supreme Court. We're going to hear about that in June. But I don't see anything coming from the Supreme Court that's going to say he has the right to fire. So therefore, I think that his calculations were just not people. I think people were going to react differently. The lawsuit against Powell, well, that'll force him to leave and he'll resign and we'll get the guy, our new Fed chairman in there sooner. Unfortunately, they didn't really look at it and see that he has another 2-year term left. So he could just stay on the committee for 2 more years and vote and believe and lead the others on the committee in a way that's going to be completely opposite. So the Fed, in my mind, was setting up for a rebound in the second half of this year, Marcus. But I feel like what's happening at the Fed makes that a lot harder. If inflation is higher and if they potentially have raised rates, that lower rate environment, I mean, housing is struggling. Housing at 6 and 6.5 isn't an enthusiastic part of the economy. At 5.5 or at 5, 1.5 lower, I think it would be. And so if we don't get that rearrangement of rates, I'm not sure your second half bounce is going to happen.
Well, like you mentioned, first of all, I think Lisa Cook is the first female African-American governor. I think there have been Roger Ferguson was on the board. And yeah, like you said, you have 12 members who are voting, maybe 19 total governors in the Federal Reserve. So it's going to be hard for Washington to just come in and automatically get rate cuts, which is probably, I imagine, his goal. But he does plan on like reducing the balance sheet when he comes in there, which can fuel more with this economy. They think that we can just grow out of this. That's the plan. But also, like you mentioned, maybe a rate hike, because that's actually gained in the odds and polls, the poly markets, all those type of things, that we'll have a rate hike maybe before we have a rate cut. And the reason being, like you mentioned, the Fed just came out and made a rate hike 25% just to tell the market, hey, we are paying attention to, inflation and a very weakening job market. Because, I mean, what were the last numbers, like negative 92,000 that came out? So we're seeing these numbers revised down really weak, even the GDP. So this type of stuff is definitely worrisome. But when you have, like I said, Fed Chair Warsh coming in there, I think the chair definitely has a lot of influence. Last meeting Powell was at, he said he's not going anywhere until there's resolution. So like you mentioned, he could possibly be on there for 2 more years. We would think that the administration or the DOJ would drop this before that. And Tom Tillis, whose term expires in January, is when you'll be sworn in, or December. He said he's not going to push anything through on that board. So it's just very interesting dynamic with the Fed. Just thinking about
I think it's interesting that Tom Tillis is from North Carolina, and the whole country and the Federal Reserve Board, it all depends on how Tom, sticks up for the Fed. And I think it's amazing how in our economy and the whole market system has this one person who's saying, I don't want to let him go. I'm going to hold this up until they drop this frivolous case. And it's like, I don't know. I'm a big believer of Jimmy Stewart and It's a Wonderful Life. And every one person has a chance to make things right. I mean, Jimmy Stewart also did a movie where he did an overnight thing when he was a congressman and he kept talking. I find these times in American history where people just decide to say, I'm going to stand up and I'm going to be counted. And I don't think this is right, so I'm not going to do it. And I as a skeptic, I kind of like those things because I think what they do is they encourage people to really think about what's important and why we're doing this. And if we're going to operate in a way that doesn't make sense, well then, say something. Because I believe that's what, leaders are supposed to do. They're supposed to lead, right?
Right. Have decency, right? It's been a while since someone said that in Congress. I mean, you think back to Joe Manchin, he definitely had control of the whole entire government during Biden's years. Mitch McConnell, when Obama got elected, they asked him what was his goal, and he said to not let any of these objectives to get passed through. So certain men have definitely had power over these things. Newt Gingrich was very powerful, but he worked with Clinton. Clinton found a way to work with him.
I'm just saying, as a North Carolinian now, I kind of like this Tom Tillis story because he's from here. I mean, it's not a guy in South Dakota who's saying this. It's a guy here in North Carolina. And North Carolina is, in my mind, kind of a toss-up state. I don't think it's clear who's going to win in the midterms. And I just look at somebody like that and say, I realize he's not running and he's free to have his opinions, but there's a lot of people who aren't running and they want to go quietly into the night. And I think that Tillis's move is a little bit of courageous.
Yeah. It's definitely a change in position from Senator Tillis. I will give him that. I had a friend who literally would write his office every day, emails, call in. He was doing his civic duty as far as that goes. I texted him and said, I hope you send him some emails since he stood up for whatever he believes in, representing the people of North Carolina. I think Tillis was endorsed by Trump the first time he was elected. So
I think that there were part of, I think things are changing. I mean, I think Cooper has a very good chance there. So I think this is going to be a very interesting fall, irregardless of what happens with Iran. I am very saddened by what happened with that school children and 168 young children killed by a tomahawk. I mean, we own Lockheed Martin and we own Raytheon, and I think it does raise questions about how do you feel about companies that are providing these weapons that ultimately can be used or misused and lead to some situations that are very negative, right?
Yeah, and I think that's kind of what Anthropic was, part of their beef with the government was how these weapons are used. But I think, it's the fog of war and it's the pros and cons. Someone's going to build these weapons, right? I saw where a company is developing where they can build like 10 of these. They're 3D printing these tomahawks, or they're 3D printing like ballistic missiles or some type of missile. So it's decreasing the cost a lot because this war is costing a lot of money. We were sending up very expensive drones to take down very cheap missiles compared to the drone. Vice versa. So they're like having very expensive missiles being shot down by very cheap drones. Only missiles I heard that Iran, we said that we had blown out most of their missile capacity, but reports are coming out now that maybe it's like only 33% that we've destroyed. But they said there is a lot more that's like in the tunnels. You're speaking about the tunnels, so like they'll have to go dig this stuff out. So that's the discrepancies inside all that. I think maybe we've dug into the war enough. We spent like half an hour on the war. Before the war came, there was still a whole lot of things going on, right? We had the SaaS apocalypse, we had private credit, we talked about the Fed. Let's talk about private credit.
Sure. I mean, I personally think that the private credit is a reaction to the bigger banks not wanting to have these things that were what I would call lower quality or lower rated items on their balance sheet. And because those banks did that, they had to seek other funding. And so what they did is a lot of the people in the private equity space said, why don't we look at some of these things and put them in our private credit type of wrappers? And I think there were a lot of people who created them. And I think that when we saw with First Brands was a case of somebody who was corrupt and, collateralizing something 2 or 3 times. And I think that when we look at what's happened in our economy, we need more transparency. And the problem is then if you get more transparency, you need to have higher quality. So I don't believe that these are going to just go quietly. The thing that I found interesting this week was Lloyd Blankfein from Goldman Sachs said he sees a lot of problems on the horizon and he sees it blowing up. And for a guy like Lloyd Blankfein, I mean, Diamond has made comments about the cockroaches, and Diamond is a pretty harsh critic. He's always going to say and do whatever he thinks. But Lloyd Blankfein is more of a smooth sailing guy. He has been around and he has moved between various issues in his career at Goldman, including the great financial crisis. And I look at him and say, there's a guy from the sidelines that has no reason to necessarily weigh in, but he did. And I look at it like a Tom Tillis case where he believes something, he wants people to know how he feels, and I think he's calling out. And I guess I'd say when these people are calling out, when Steve Davenport or Clem Miller or Marcus Sturtevant say something, it's important. But when these people who are leaders of their companies and have been leaders for decades, they say something with all of their information that they have from all of their divisions all over the world, I listen because I believe that, the best way to get ahead is to, step on the shoulders of those who've gone before you. And I look at these advice of they're giving me and say, I hope clients are taking some assets off the table before we are down another 10. I think I said 10%. I now see this correction probably going to 20. I don't think we're going to see enough of a rebound given the inflationary factors and the Fed not lowering. That's the kind of thing that I think has changed in the 4 weeks since we last did it. And I look at that and I look at, the 10,000 more troops and I look at some of the other things with some of our allies. And I also think it's strange that, Trump would delay a meeting with Xi. And I think pushing that out tells you the extension of this effort is going to be longer than we originally thought. So given those two things, I think the overall correction in the S&P will be closer to 20. And I would just say to people, now is not a bad time to have a little more dry powder. I don't know. Are you overweight, underweight, or regular neutral weight now, Marcus?
I was trying to look and see where the markets were right now. I'm pretty neutral weight when it comes to equities. I made moves with my clients before this. I haven't made any drastic moves. I don't ever really make drastic moves. I haven't really made any moves inside my clients' portfolios in the last few weeks since this has gotten started. Especially once I've seen the tempo, especially once I've seen how quickly it moves with oil or how quickly it moves with posts. I've always known this as far as maybe not always known, but I figured this out a while ago that these things tend to move. They can move quick. You can't be completely out of the market right now because
no, I'm not saying to be completely, but
right. The worst day in the market could be followed by the best day in the market. That could happen or within the next couple of days. But I do think that as you see inflation increases and generally when income generating products reach around 5%, people will go risk off because if you can get or reduce their exposure to equity. If you can get 5% from something that's quote unquote safe without the worry and risk of your stock market for a while, yeah, people are going to reduce that. So yeah, I guess position more that way. Even inside the private credit, we're looking for different type of private credit. Maybe not the stuff that's out there now per se, because they still need to come in my opinion. They should just take the flush, go ahead and say, these are our books, write down everything that's bad. You know what I mean? Go ahead and write down, get that out the way. Your stock's going to crash for a little while. But private credit in general, we saw people asking for their money that was gated here recently. Since the last time we spoke, that was one of the big things. This money's been gated. But that's how funds are set up. It's set up to be gated so people can't take out all the money at one time. But we've also seen high net worth individuals cash going into private credit. Maybe not into those stocks, but into individual funds. So it's watch what I do, not what I say. Same type of thing.
I think people who are saying, I'm surprised I'm gated, it's a game, right? Because everybody knows that's what the difference is between a regular investment and a private investment, is that on the way out, there will be a process and you will be lined up like the other investors, and that's what happens. And so to sit there and say, I'm shocked, you know what I mean? It's kind of like the guy running the casino in Casablanca, right? I'm shocked there's corruption going on here, there's gambling going on here. It's gambling when you're in private credit. If you didn't realize there were gates and that those gates could cause you to not get out as quickly as you wanted, then you weren't playing the game with all your marbles, right? I mean, that's part of what you get. And so for people to do this and act surprised, I think is kind of ridiculous. But yes, I've heard people say, now may be the time to go in. I think we need more clarity before we put more assets in this. But I agree that the whole space of private credit is being painted with one brush and it's all negative. And whenever you see that, it's just like when everybody was into AI and everybody was on that side of the boat. Everybody was pro AI and it's like, how do I make money in a period like that? You have to, in some ways, stay in the middle or go on the other side of it, because it's not easy when the momentum of the mob is taking you one way and you don't necessarily feel the same way. And I think AI got ahead of itself and now it's pulling back. I think private credit probably got extended to people that it shouldn't have. And now we're seeing people get out of it who are what I would call weak hands. There was that expression with the meme stocks about having diamond hands, right? You have hard hands that you can hold anything no matter how hot it gets. I think we know that when we see this, we need to hold and take things in perspective. If you have 40% in private credit today, you probably have too much. If you have 3 to 5, and you know that those 2 or 3 investments are good, they were good, they've been repriced good, they're showing good cash flows, then you have a different problem. And I think that everybody needs to always ask that question. And I do this with my clients on concentrated stocks. I say, okay, you have $10 million in Microsoft. If I gave you $10 million in cash today, how much Microsoft would you buy? And the answer isn't 10. And people look at it and say, you're right. I got some of these shares when they were $40, $70, and we're not asking you to sell those shares. We're saying some of the recent shares, it might make sense to pull back some and take some profits, because you never go, as my father used to say, you never go bankrupt taking profits.
Yeah.
And so I just say to people as an advisor right now that it's a good idea to look at your portfolios, see how you feel. What's your job situation? Are they talking about layoffs at work? Let's make a holistic decision. It's not based on the price of oil in Iran. It's not based on whether the Fed interest rates are 5.75 or 5.25. It's based on you and your family and your needs and where you are financially. And that's where you try to make good decisions for the plan. You don't want to vary from the plan too much, but you also don't want to get run over if a negative event happens and we have an unexpected medical expense. You need to put some money aside and think about it and act prudently for your plan. There's the people on CNBC, they're not going to be there when you have a loss and you need to go ask somebody what to do. You've got to figure it out. And having a good advisor is a big part of that. And that's what I think makes it easier for people, because they're busy on their jobs. They're busy working. They're busy raising kids. They're busy coaching the kids' soccer team. It's not easy being in this, economy or this different points in your life. Take your investments as seriously as you do some of your other decisions. Some people say they spend more time buying a car than they do buying a stock. The average person spends 10 to 15 hours, and the average person buying a stock spends about an hour. I mean, I can tell you if it's a good investment and it lasts for 10 years, 20 years, you might have wished you spent a little bit more time on that than the car, which is a depreciating asset.
Yeah. Perspective is everything. And as you mentioned with the private credit, people, or just any investment in general, you made some really good points that people have to understand what they are invested in. Like that falls back on the advisor as well as the client if they don't understand that these things are gated, how they work, and the fact that these investments work best in the long term, right? Private credit, you work better when you give it time to work in the full funds. Like, you should read that prospectus, if it gives you a good reason to go to sleep on a Sunday afternoon, maybe wake up and finish reading next week, but you need to understand what you're in and why you're in it. And yeah, private credit, you probably shouldn't have 40% of that. You probably should have 40% of gold. You probably should have some type of diversification inside your portfolio, though. It just shows. I saw recently where they were saying the 60-40 portfolio is tremendously underperformed here lately, right? So it's just like right now, there's almost nowhere to hide, but there are places to hide. You just have to know and diversify your portfolio. So
I hate to tell you this, Marcus, but my put options have done pretty well in the last 3 or 4 weeks.
Exactly. Do you want to talk about like what you did since we've spoken and you with the options, like how Main Street could have played that?
Sure. I have a client who has a lot of technology in his portfolio. And so what I said was the two vehicles that I'm going to hedge with are S&P 500 with the SPY ETF, and that's just the whole market. And so I believe that the whole market was not priced right. The AI was too high, and that the market wasn't reacting in ways that made sense. So everything that was happening was a positive. There was no way, even when they started buying each other's, products. And that reminded me of 2000 when that started with, all the servers, and everybody was trying to have cross deals with different people. And it was just like you were building the market up on yourself. And that's not the way that you want real growth, meaning growth that comes from independent people picking and selecting your. So AI was high, and I thought that this situation with Iran could get worse. So I bought some protection that expires in June, September, and January. And the reason I did that was I felt some of these things could get resolved quickly. Some of these things might not. And then I thought about the election and September options. And I said, if we have a change of government towards Democrats, is that going to be a negative to the markets? I think typically it is. And it could be. And it could be that just the back and forth, the conflict would create an environment that's not good for investors. And then I looked into January and said, let's say the election goes good, but what if some of these things persist for a longer period of time? What if our energy, the energy question around AI has not been answered in my mind. I don't think we have a plan. I don't think we have a real good solution. Some of these small nuclear could be it, but it's not here yet. And therefore, I don't think it's extrapolatable and transferable across all the states. So I look at things like that and I try to say, I don't have an exact silver bullet because all I have is a tool. And I apply that tool with the SPY in June, September, and January, about 10% lower or 15% lower. And then I looked at XLK, which is the technology sector, which I think was at the heart of the overpriced market that we had a month ago. So AI was at the heart of it. And I looked at the technology sector and the implied vol versus SMH, which is a semiconductor index. And I thought that it covered more of, because companies like Google, companies like Amazon are still at reasonable prices relative to some of the other names that are at higher prices. Apple is at a reasonable price. So when I look at the whole sector, I don't want to say it's just semis that have gotten out of. I think the whole sector had, a reaction that was too much. And therefore, I decided that we should hedge part of that as well. So I think that what I'm trying to do is say, hey, I agree with you. We're not going to sell the whole stocks and go to cash. That was never a choice. What my choice is, do I want to hedge, 20% of my equity? Do I want to hedge 40% of my equity? I usually don't hedge more than half because I want half of it to continue to operate and succeed. And so if I do hedge half and that hedge helps me on those downsides, I think when I checked yesterday, they were up about 75%. That type of performance on the amount you put out there is, I'm not saying this to guarantee performance, and past performance is no indicator of future, but I'm just saying that options can be a piece that you can use to try to help your portfolio. Stay invested, don't pay taxes if you have a really big low cost basis, and then use some of those as maybe ways to sell call options to pay for the puts. So generalized puts with specific call options written on names that are really overpriced is how I look at it for clients, and how I think is, there's sell, there's hold and hedge, and there's hold and don't hedge, and put new cash to work in fixed income instead of in, there's several ways to kind of different shades of gray, I guess, if I want to make one other analogy.
You're getting buried up over there. And what people should realize is that even when you mention your puts, that these puts they're longer dated options, right? Like you're not talking about, like, if you would have had that put on for Monday, you would have lost a lot just because that tweet or X post and how much the market moved. That's a whole nother story, what happened with that.
Right.
The market.
I'm not speculating. I'm trying to hedge my investments.
Right.
And so I think that's different than speculating.
Exactly. And it's different when people, because I don't want people to think that maybe what you're talking about is like shorting the market, like where you're taking stuff out on margin, because that's when you really get hit. If you go out and buy some of these stocks on margin, then your margin gets called in. Like that can be infinite losses if you try to short. Like literally, they can go in.
And I think there are, let's just say I see one trade out there that's going to unfurl, which is a lot of people borrow on margin to buy private credit. And they say, look, my private credit's paying me 9 or 10%. I'm borrowing at 6 or 7. I get a 2 or 3% spread there, and I get to participate in all the upside. Wonderful. You know what I mean? But when it goes the other way,
yeah,
and all of a sudden you're losing 10, they're writing down the investments 10 or 20%, that eats up a lot of that 3% spread, right? It's going to take you a lot of years on a 20% decline. You're going to wait 7 years to make that up with that spread. I think that's where things, and what if rates go up and suddenly you're borrowed at 7, but now they're telling you, well, it's actually 8.5. Well, then all of a sudden your sure thing that was a money machine has changed. And that's where I think some people cautiously add private credit and private equity. Some people don't do it so cautiously and say, hey, this is something I have access to and I can do this, and I'm going to make whatever I have to decisions to make it happen. And look, I think we all want to get ahead. We all want higher returns. The question is, what risks are we willing to take for them?
Yeah, your risk tolerance, a lot of people don't realize that they're so off sides with their risk tolerance in general. They think that they are, like you said, they just see the returns for this margin that they have, and they don't realize when it goes down a lot. They may have started to realize it now with this recent market movement. This could be extended. I mean, we've seen a little bit longer downturn than most people who've been invested, because a lot of the investments now are like post-COVID investors, or a larger percentage of investors have grown percentage of like retail investors since COVID. So they may not have seen all of these moves and understand that some of this stuff may go for a longer time, right? So it's just
Right.
it can be scary to people. But like you mentioned, there are definitely always ways to make money inside stocks. If you feel like it's going down, you buy puts. If you think it's going up, you can buy calls. And then, like you said, these are positions you already own, so they're cover calls. So you're not even having to like go out and buy those positions to cover if that something was to happen drastic inside there.
Right. And I mean, Marcus, I look at Circuit Capital and I look at what you do with ABC Squared, and I know this seems gratuitous, but I think what we're doing is helping people through a difficult time. And I think the fact that we'll talk about what's behind our ideas and we'll share opinions on ideas, shows that we're not telling everyone that we have all the answers. I think we have a lot of questions, and I think those questions are good ones. And ultimately, a good discussion and covering some of the issues, we might be avoiding the mistakes. And in my mind, that's why you hire professionals, because you think that they have some knowledge and some abilities through their experiences to be helpful.
Yeah, we should provide a different mindset and approach to our clients. When things go, like, we should help them not sell low. Like that's what we should be there for as part of the reason. I know we're coming up on the hour here shortly. I know you and Clem's a great dude. I know y'all do the Skeptics podcast. What have y'all been talking about lately on Skeptics podcast? Let the folks know.
We had some interesting guests. We had a woman on, Kathy Karlik, who has started a nonprofit for women, or a platform for women, where she talks about Suddenly You, which is this concept that what happens when my husband dies or something goes on with my job and I have to suddenly make the decisions and understand what the ramifications are. And her point was, get to know things before it's suddenly you. Get to know where the money is and how things would work, and selling your house, and what are your debts and what are the things you need to worry about. Because suddenly can be you. And we know that there's going to be a huge transfer of assets over the next 20 years. Trillions of dollars, because wives live longer than their husbands. I know it might not be the case in your family, because you live a beautiful life, Marcus, but a lot of men work very, very hard and may have all this stress, and therefore they, it causes them to have shorter lives. You have less stress than all of us because you're so happy all the time. It doesn't cause any stress in your life, so your wife might, have a different life. And so I think what we're trying to do on Skeptics Guide is to keep giving people information that'll help them understand the investment industry. And Clem and I are going to share our own portfolios in the next two podcasts. And so talk about why we're invested the way we are and what we think the strengths and weaknesses are. And I think what it'll do for people is show them that everybody has different ways they can manage their wealth and their money. There is no silver bullet, as I talked to before. I think there's different approaches for different people. And if you want to own a portfolio that pays 4% dividend yields on average, that's a pretty good way to have equity exposure and have cash flow coming to you when you're retired. Some people say it's cheaper to just own the index. Yeah, it could be cheaper, but if you have to sell sporadically at times and make another decision about how to come up with income, that's not necessarily easy. I think what we're trying to do is show people how different approaches and different ideas can all be right. I think there's more right than there is wrong in this industry. I'd just like to, I don't want to talk about private credit because it's really not a problem for 85% of the economy. 85% of investors don't own private credit. So we can talk about it and how it affects that top 15%. We can say, let's continue to add value to all 100 and talk about things that are generic and that are meaningful to everyone. And part of that is, fear of this. And I want to tell people, if you're bothered by the news and the media, turn it off. I'm not going to be able to explain every nuance of every news article. But what I can do is tell you, if you take a longer term view and you look at yourself as pretty well balanced, that will get you through it. And so I don't mean to be, dismissive and saying don't follow the media, but I do mean to say if it's causing you harm, if it's causing you heartache, listen to less of it. See if the heartache goes down. Go for a walk. It's beautiful. It's spring in North Carolina. There's a lot of things to celebrate. And so I guess I go back to do what's right for you.
That's good stuff. And yeah, like you and Clem are doing really good things on the Skeptics podcast. Y'all are really you have a good lineup. Y'all have had some really good guests on there. Speaking of guests that were on podcasts, we had Adam Parker on the Main Street Meets Wall Street podcast. So for anyone listening, he was on your podcast as well, the Skeptics Guy. Anyone listening, he said if you go check out his research with Trivariate and you say Marcus, you put Marcus in the code, you'll get the first month free. So that's for anyone.
Nice.
You want to go in? Yeah.
I also saw George on there.
Hmm?
George Hopfier was on as well.
George, yes, Mr. George was great. He was on last part 2 of that one's coming out next week. He had a great question. He said that he asked. He had a lot of great things that he said, but he had a great question he asked. He said when people come in there, he'll ask them if you have, just talking about time in the market, if you have $100 and it goes down to $50, how much have you lost, right? And then how much do you have to gain to get back to $100? So that's that question. That's, that can throw some people off. But that's one of the things, I guess, if you can't answer that one, he's not going to hire you. So, the moral of it is it's hard to get the money back, right? It's more work to get back. So yeah, we're doing big things over there with that as well. And then just like having folks like you on, Mr. Stephen, to come in, we can sit down and just talk and hash out the world. And, from our view, since we started talking, the Dow's down like 700 points now. Not since we started talking, but it's down at like session lows. I mean, until we can meet again, what do you see happening in between now and I guess next month with this market? And give me if the
I see ultimately we're going to have a more violence and more activity, but I think it's starting to move towards what I'll call an end game, where I think that Pakistan and other countries want to contribute to a solution here. I think there's talks going on. I don't think the talks are necessarily over. I would love to know who the talks are with. I'd love to know what the status is of Khomeini's son. In order to make good decisions, you need good information, Marcus. And that's where I feel like we're not necessarily being informed completely on all these issues. So I'm a little bit worried. I wish there was a little more clarity as to how an endgame would work. I think that it's ironic that Barack Obama's plan had 15 points with Iran. Trump's plan has 15 points with Iran. 10 or 12 of them the same points. He tore up the agreement because he said they weren't following the agreement. So to say that we're going to go to, and put an agreement in place that's very similar to the one that was already in place and torn up, I have to ask, what's different? Are we expecting, are we doing the same thing and expecting a different result? That's insanity. I think that they're hoping that this damage to their economy is going to make them so weak that they will have to follow this plan. I also think what you do is you're kind of radicalizing the population that is in the religious group. And the more people that are killed, the more children killed, the more there's going to be people who are going to react in ways that isn't productive. I hope this stays concentrated in this area. There's been rumors of Iran threatening to bring a dirty bomb into the U.S. I don't want to see that. I don't want to see any of these things expand. I would rather see it contracting and stopping and going to a more reasonable level. I think what we're going to see is there will probably be Iranian Guard who will stay in those hills on the side of the strait, and they might not follow like Trump was glad that those 8 tankers went through, 10 went through, because it says there's leaders that are controlling the military, and if they tell them to stop, they will stop. But if you see a desalinization plant, if you see their energy infrastructure blown up, some of those rules are going to change. And that's where I don't want us to get to that point. I'd like us to get to a point of, hey, let's figure out a way to make this work so that the world economy can get back on track. But I would say that we have another 10% down in the markets. And I think that you should be prepared for that and say, okay, at some point when there is a ceasefire and it looks like it's a permanent ceasefire, I would say that some of that money you put into safety, you need to put it back in. So I would say think about that as we get closer to a ceasefire. Do you want to just put the money back in because your downside has been capped? I think that's the next decision you have to make. If you've already taken some chips off the table, great, hold on to them, maybe expand them, and then get ready to come back in, because long term, the market is the solution for you to deliver inflation adjusted value add.
Boom. 10% more down. Stocks in the long run, stocks for the long run, as Dr. Jeremy Siegel said, like they have historically beaten inflation. More consternation, hopefully clarity inside of the end game in the war, where we're at inside this war. And then we can just get back to the normal stuff, is AI taking over the world? Will Kevin Walsh ever be elected? Is private credit a bubble? Is inflation a problem? Are people losing their jobs, and are we in a recession? So
yeah, I think the Fed and other things are much better to talk about than Iran. Nothing personal.
I agree. Well, I think that might cover it for the month. Is there anything else you want to talk about today, Mr. Stephen?
No, thank you. I appreciate your time listening to me.
Yeah, and for anyone who enjoyed it, check out Mr. Stephen's. They have the podcast Skeptic's Guide to Investing. Where else can they find you if they're looking for you, Mr. Stephen?
Circa Capital on LinkedIn. You can find me, and you can find my company, Circa Capital. My partner and I are helping individuals with their portfolios and trying to help their retirements, and trying to do it in a thoughtful and balanced way. So if you're interested, please check us out.
Awesome. Well, thanks again, Mr. Stephen. We'll call it a time. Main Street Heart meets Wall Street Smarts. Thank y'all.
Be safe.
That wraps up an incredible hour with Stephen Davenport. It's not often that we get that level of institutional perspective on the macro landscape, especially considering the volatility we were seeing in March during that live session. We break down some of the bond market and the shifting yield curves that gives us the big picture of where the smart money was moving. We spent a good amount of time talking about the Strait of Hormuz. But as always, we're here for we know the big picture only matters if you know how it affects your picture. We need to take those institutional signals and translate them into actionable policy. The kind that impacts your wallet, your business, and your long-term plan. That's why for the second half of this, we're going to pivot into normal people, quote unquote. If Stephen gave us the what from 30, me and Chris here are going to dive into the how from the ground up. We're diving back into the framework we established from our March 7th policy for normal people release. And we're going to look at how the escalation in the Middle East and the Fed's recent stance on sticky inflation changed the math for everyday investors since our last sit down.
Welcome back to Policy for Normal People. This is your host. In this special segment of the monthly market update, we talk about the financial markets, how policy intersects with that, and Marcus's special focus on helping Main Street meet Wall Street by understanding the markets better for the average, normal, everyday person's life and financial decision making. Marcus, welcome. Good to see you again.
Hey, Christy, how are you? Thanks for having me on again.
Yeah, absolutely. Always a pleasure. We're going to dive right in. Our topic today is wealth and war. As you know, folks, the United States has initiated war with Iran in collaboration with the Israeli government. That's all I'm going to say about that politically, which is to say I'm not going to be political, as we do not do that on this show. But what we do want to talk about is how the war is affecting financial markets and what that may mean for you. Without further ado, Marcus always gives his general market overview, and then we kind of dive right into that main topic and talk about a little policy intersection. What's going on in the markets lately?
Yeah, markets have been volatile. That's one way of putting it. Since the last time we sat down and spoke, we've seen our first down month across several markets in February. Stock markets, when I'm referring to markets, referring to stock markets, the S&P, the Dow Jones, they were down last month, as was the NASDAQ. Small caps were down, which have been leading the market. We were seeing a flight to European indexes. They've been outperforming here lately. That's kind of changed here in the last few days. But the last few days have been really tricky for markets. And as they try to digest what's going on, we've had the Supreme Court decision, which is a big part. We probably should talk about that a little bit as far as how it impacts tariffs.
Sure.
Since the last time we spoke, we've had Fed data come out. We've had inflation come out a little bit higher than expected. Jobs come out today a little bit stronger than expected. So with the war going on, people aren't exactly sure where the Fed's next move can be. And then we also are sitting here with, obviously, with the war oil prices. So I guess we can start with the oil prices, right? We just jump right in there.
Yeah, absolutely. In fact, I saw this morning, I just by coincidence happened to be talking to one of my financial advisors up here in my neck of the woods here in Virginia through Edward Jones. And she happened to mention that oil prices had spiked about 10% since last week. So seeing a lot of fluctuation there. Are you seeing, is that confirmed with what you're seeing too?
Yeah. So Main Street oil prices, just I pay attention to gas prices.
We all do. We need it.
So an example, Sunday, I put some gas in me and my wife's car, 241 a gallon down here right outside Charlotte, Wall Street South. And today I went by the gas station before we start recording. It was 301 at the same place. So 3 days, you see the prices going up, right? Initially with conflicts like this, I mean, we can look back historically, like the last 40 years, and you'll see that initially you'll have a spike in oil prices. But if you go out 8 weeks or so, oil prices that usually come back into the same range they were in. Stock prices do the same. Like initially they'll go down, but if you look out 8 weeks, like 95% of the time, 90% of the time, stock markets are up like 4%. So the initial shock, the duration of the war. So if this is a short war as it's been projected, then it may not have that much of an impact on the markets and oil prices at home, a long-term impact. But if this turns into a prolonged war, we've all been, you and I were here for the first and second Gulf War. If this turns into, say, the third Gulf War, something that's just an extended period of time, then that could see impacts on the markets and impacts on oil prices overall.
Right. And I think if I understand correctly, we do here in the United States still have a surplus, an oil surplus in our holdings. So wondering, how that's all going to intersect with what's happening as well. I know that the government wants to has expressed a lot of interest and has taken action, in fact, to open up drilling for more oil in various parts of the country. Again, we're not going to get into the politics of the good, bad, and the ugly of that on here, but will be interesting to see what decisions are made in terms of the reserves that we currently have. I know I talked to some Canadian friends this morning, and just we were talking about other things, but this came up. They have similar concerns in terms of how this will affect their reserves and what they do in terms of imports and things like that. So it's certainly not uniquely a U.S. problem. It's an issue for all countries that are importing their oil reserves. And so it'll be interesting to see what happens with that, Marcus. And yes, you're right. You and I lived through both Gulf Wars. We saw what happened there. It was 309 at the pump this morning when I filled up here in Alexandria, Virginia. And folks, that's, just literally a stone's throw from Washington, D.C., a few miles. So we're traditionally always a little higher here, but compared to where you are, for instance, Marcus. But nonetheless, it was a jump from about 269 last week here is what I remember it being. So yeah, lots of stuff to watch out for there. I did hear, though, that the market as a whole was down about 1% to 2% from its all-time high, but the all-time high being that, I guess, makes that still pretty stabilized. Do you agree?
Well, the market's kind of seeing through this right now. Like I said, the market, when missiles fire, stocks go higher, fortunately. Like it's sad. Obviously, we should take a second and think about the troops and the people who are actually protecting us so we can do these things and spread this message. The ultimate soldiers, ultimate warriors out there. But
and
more
lives have already been lost.
Right.
Yeah.
So their families. But ultimately into the impact, I want to step back a little bit with the oil and kind of just explain why the oil, because there are already oil in the ships right now, right? Sitting in that Strait of Hormuz, and you can't get through it. That's the problem with the oil right now. So you can't get the oil through. They have oil, they have productions. Iran hasn't hit any of the production facilities yet for the oil. They're not really messing with those. They're hitting other strategic positions, but they haven't really started to hit the oil production facilities yet. So the oil is there. It's just whether or not we can get the oil through. If we were to move the oil from our reserves to put them into other parts of the world, I don't think the American people would like that very well. The American people haven't really figured out how we're going to stomach this war, right? That's a really big part of war. Some people who lived through conflicts like Vietnam realize that eventually, regardless of where you're at, if the public and American sentiment can't deal with the impact of war, you're going to lose that war. You're going to lose troops. You're going to lose whatever you have going on. That can be detrimental, and that's when you start to see oil prices go up. If we were to start sending our reserves, which are abundant now, out to other countries, that would send out a message. One of the messages that we sent too, because oil prices were up, but they came back down like yesterday when the president came out and said they would ensure that the U.S. would insure these oil tankers in the Strait that go through because Iran had threatened to like blow some of them up. It effectively closed the port, but you can't really close it, or the Strait, but you can't really close it other than, blowing things up. One of the things is that the insurance that the president is guaranteeing for these tankers in there is supposed to be only for American companies, but a lot of this oil that is in there is going to China. So how will the American people handle that, right? We're providing insurance for Chinese oil as well. So I just wanted to talk about that for a second.
Yeah, that's a lot. That's a lot to take in because our negotiations regarding tariffs with China, as well as other countries, is also playing itself out and continuing to be a part of this bigger conversation as well. So, yeah, I mean, it's worth considering all of that. Well, we've talked a good bit already about the main topic, which of course is the markets and the war. What else is going on in other places relative to the market that you'd like to highlight today?
Another thing we've seen since last time we met is the market crashed. It had, like I said, the market was down. We had sell-offs, the SaaS sell-off.
Tell us a little bit more about that. I'm not as up on that.
Gotcha. Yeah. So the software as a service, SaaS. So we've had different upgrades come out from Claude and ChatGPT. All these different AI companies have come out with things that will eliminate jobs. So we saw like Block last week lay off 4,000 people out of their 10,000 workforce. You don't have to be a math genius to know it's like 40%, right? So 40% of the workforce is being replaced by AI inside of that. So what we saw a few weeks ago, we may have talked about a little bit in our last
we did a little, yeah. And I'm curious about how much it's related to replacement of jobs temporarily because of capital investment up front as they expand, build centers and that kind of thing versus what's maybe going to be projected for long term, or is it too early to know that?
Well, with all AI, some people will be disruptive. Some people will be totally taken out, destroyed in this situation, right? One example, Larry Ellison at Oracle gave the other day as to a way a company, he said like his, obviously he's going to speak highly of his own company, is that they have, so AI scrubs the internet and brings you all this information in. So that's where people in the seat per model, like companies like ServiceNow or Salesforce, where it used to be that you would buy a CD or something and put it on there for your sales team, your customer relationships. And then when the information became more updated, you would have to get another CD. But it's like one CD that you spread through the whole entire team. Then them all moved to a per seat model where people were being paid by the actual seats that you had because all the information was in the cloud. And whenever anything was updated, it would be updated for everyone. So say you're paying $10 per seat for 1,000 seats. What the disruption was is that a lot of this work could be done by AI bots now. So SaaS didn't need as many seats, right? But these bots are scrubbing public information. So Larry Ellison with Oracle was stating that the bots can't get the private information. That's where Oracle has, like they have this private information, Oracle, Palantir, companies like this. This is where AI can't really disrupt companies like that yet. So there will be companies that will be disrupted and completely eliminated in this process. Just like there were companies with the .com and trains and the industrial revolution. It's just, there's always going to be things displaced and moved out.
Yeah, for sure. Yeah. And this is a conversation that will continue because, it's kind of hard to predict. We always have a tendency as human beings the panic happens first. And, there's a bit of, excitement, which is understandable. But then a lot of times you kind of have to wait it out too, to really see. I've heard lots of conversations about white collar jobs. The irony that many of the tech jobs are, the innovators of AI have actually put themselves out of jobs, in many cases. And to what extent that is going to be a significant impact on the workforce overall, it's happening in some places, like you were saying, but to what extent it's going to be, even worse or really affect a significant part of the workforce to the extent that because these are consumers too, and so everything is connected in that way. If you have a large portion, a large segment of the workforce at any one time in particular that is laid off looking for work, then you've also got that amount of consumers that are going to decline in the economy as well, or the way in which they consume products and services is going to dramatically change, even if that's temporary. But it's an interesting, if not little bit scary, kind of thing to think about. But AI is here to stay, and I know that I use generative AI, as do you, Marcus. In many of our everyday activities, far beyond just a Google search, creating, in my case, graphic design and lots of different concepts and content and things like that. So I think what's going to have to happen is that policy is going to have to catch up. The law is going to have to catch up. I know there's a lot of concerns about cybersecurity and things like that. And that's kind of can segue us into something else I wanted to talk about, which is the ongoing internal war between Anthropic and the services, AI services that it provides to the Pentagon. A lot of people are probably aware that from the news reports that there's a fuss going on between the Pentagon and Anthropic, and I think Anthropic's leadership, Dario Amodei, their CEO, put out a statement across social media just a few days ago, a very long statement about the rationalization and their reasoning for why they were pushing back against the government on concerns about surveilling our private information. So, talking about, to what extent it would give access and what would be done with that. So I think there are guardrails in place right now through Anthropic to prevent that from happening, for preventing a breach. But it's an interesting conversation that's happening. Any thoughts on that and how that might be affecting the rest of the tech sector in particular in the markets?
Yeah. So first of all, here's a question to ask, right? So compared to the horse and buggy era, right? Do we have a lot less horses than we used to have? We have a lot less buggies. When cars came out and airplanes came out, do we have a lot less cars or airplanes? I'm just saying, like, with technology, these things are going to innovate and people are going to find ways to use them, right? Whether it be for leisure, whether it be for work, whether it be for something. This stuff's going to work itself out. As far as Anthropic, I mean, we have to be vigilant. I don't want to be dismissive of that. We have to be vigilant as people, as citizens. As far as Anthropic and OpenAI, that got a little messy there. It first stemmed from the situation in Venezuela. That was where Anthropic was questioning the use of their technology, and they were questioning whether or not the Department of Defense could have just free reign, and on the Department of Defense just have free reign other technology. Venezuela also ties back into this whole oil thing as well, because you cut off a major supply of oil with Venezuela, which also goes over to China and Russia. So cut those off. We're cutting off oil all around the world. So that's a big thing to watch in this whole macro picture. But U.S., right? Yeah. But inside of Anthropic, but if you remember back with OpenAI, when they started, they were nonprofit. They switched to for-profit. They just seem to be a little bit more adjacent to the White House and to their moves. But Anthropic did not want to allow the surveillance of citizens in America. They didn't want to use their weapons for certain things. They didn't want the monitoring things. Friday was the deadline. OpenAI stepped right into that role, said, we'll do it. And then Sam Altman is trying to walk back the statements like, oh, well, we still want these protections, because his staff was upset. They were upset about these things, It's
a bit of a mutiny inside.
So he was trying to walk some of this stuff back, saying, we do care about, we have the same concerns basically that Anthropic had. But he recently just came out, in the last 24 hours, and said, ultimately, at the end of the day, the Department of War has the final say over how our technology is used. Then he also pointed out that if he didn't step into the place, that XAI would probably step in there as well, which he didn't.
Somebody would. But, I think this will end up in the courts ultimately at some point, because don't you? Because it isn't just the Pentagon or the Department of War has the final say. We're talking about something that gets into privacy laws and all too. So, at what point it's going to run afoul of the laws is going to be some interesting questions come out of that, I would think. I don't know how. I think it's having trouble catching up.
Well, how many times in our lifetime have we seen reports of the government spying on citizens?
I was just going to say, one of the things that I thought of instantly with this going on, like you, I don't want to dismiss it. It's a serious thing, and I care about it. But to what extent have we already ceded a lot of that privacy and a lot of, and I don't mean just voluntarily where we decide ourselves individually to go on to social media and share whatever it is we want to share, but even them extracting. We had these conversations, similar conversations and concerns with the government and cell phone use. There was talk going on about that, government wanting access at different times, especially during 9/11. There was a lot of concern over to what extent the government could look at cell phone data to get information from people, see what they're texting about, what they're sending messages about, and so forth. So it's not new. The idea that it's just happening because of AI's entrance onto the stage would be incorrect. And I swear, Google listens to us. I no more say something here at home, to my husband, and then, we get an ad that's related to something we might be talking about. I'm a little more worried about that in a way.
Well, I mean, literally, I think it was Apple that was getting sued because Siri was listening to people. So yeah, if you're going to put something out, if you put something out in the ether, you better assume that somewhere something is listening to it, which ties into all these smart systems that we have in our house, all the electronics, all that stuff side back together. If you want you want to tell someone something, just tell them face to face, I guess. A better way to keep it.
Yeah, that good old-fashioned conversation, that hasn't gone out of style, or I hope it doesn't, for sure. So we talked about oil, we've talked about Anthropic, war-related effects on the market. I'd like to take a little bit of time that we have left here today, Marcus, to focus more on you and how you work with your clients with teaching financial literacy and coaching. And in particular, I think you've adopted a new tool called Monarch. And I'd like to hear more about how you use that to work with your clients.
Oh yeah, Monarch Money. Monarch Money is a personal budgeting finance app that helps people. You can go in there. It has AI in it as well. It's really good for people who are trying to share their information with, like, say, your spouse, people who just start budgeting together, people who've been doing it on paper and pad, want to air all this stuff into their computer. You want to have real-time access to your budgeting, to your finances. I know my clients share their accounts with me, or share where I can go in there and see, and we can talk about things if we need to. One thing I will say about Monarch is I don't want to say if it's age difference, but it's better if you start out uploading all your stuff the first time on a desktop situation and then go into the app, because it could just be confusing on a phone to look at all that stuff for the first time. But Monarch's a great tool. It helps with personal budgeting. Like I said, I use it with clients. Yeah, and if anyone on here wants to use Monarch, there's a link that you can use. But I will maybe compensate if you use the link for me. Yeah, so Monarch is a great tool. I don't want to jump too far away from the Supreme Court decision, though.
Yeah, no, we do want to. We should cover that. That's another important development, I think, even since the last time we talked, perhaps.
Right. So we had the Supreme, and I think some Supreme Court decisions came out today. I haven't seen the results of. They may be speaking about Lisa Cook. And also, Tom Tillis is locking up these passages or nomination process. He said he's going to lock up all the committees he's on now until he gets confirmation or gets answers with Chairman Powell's investigation, and maybe even Lisa Cook's. But anywho, back to the tariffs of SCOTUS. So SCOTUS came out with the decision, and as of all things law, like you said, you're up there in DC and you know policy and you know how these things work. It's really what it said, like the decision and the reflection. First of all, the Supreme Court did not give any means for paying these tariffs back, right? Immediately, once the president spoke later on that day, he said this would be in litigation 4 to 5 years. That was his expectation.
Right. And then he had a workaround. He's going through a different act, correct?
Right. Justice Kavanaugh pretty much laid out in his dissent the way that you can go about it. But they had already been planning on this. If this decision came back this way, I mean, that day the markets didn't go crazy down or up because of the decision. That didn't have anything particularly to do with the markets that day. What people were worried about, it was already expected. It was already priced in, per se, that the Supreme Court would go against it. But then he's come back and he said there will be 15% tariffs across the board for everyone, baseline minimum. I heard Secretary Bessent speaking this morning, and they were asking when those will go into effect. He said those should be in effect by the end of the week. So we'll have global tariffs at 15%. Those things play into the markets, right? Tariffs and tariff uncertainty. I don't know if y'all are all old enough to remember last February through April when we had the tariff shock, but those type of things play off. So he didn't have any remedy from the Supreme Court. So even if this tariff revenue is to be refunded, like you said, how are we going to refund it? I don't know. I was thinking different ways. Maybe they'll try some type of, I don't think these dollars that are in there are ever going back. So maybe it'll be like
I was going to say, do you think it'll ever actually happen at all?
Yeah, I don't know if they're going to give it back to the American people. Like, I don't know, because who paid the tariff? Because part of it was that the the foreign governments were paying the tariffs. But then we had reports coming out, like we said last time, that said the Americans were paying like 90% of the tariffs. So how does this all go back? It's just going to be sticky. I don't think this is anything that is resolved during Trump's current administration.
Well, I'm sure that there was a little bit of strategy around knowing that. Even if it causes a fight, it's going to take a long time to resolve the fight, and that wouldn't happen until long after he'd already made a decision, acted on it, and is out of office. So,
and speaking on the point of view, when President Trump was speaking yesterday about the Iran war, he said we won the tariff case. Point of view, right? He thinks they won, but they did enumerate a lot more powers to him. Well, not enumerate, but they verbally gave him more powers in his mind and his administration's mind that they can take and use to implement more of these tariffs. I think it's Section 301 that they're talking about.
Yeah. Well, I think we're in a different era with this president. Again, not getting political here, but just simply observing, even myself as a citizen, that, we've not had a president in my lifetime, I know, that has been as aggressive with the, not just, intentions or desires to change a policy or do something different, but just going ahead and doing it and then letting the cards fall, kind of, and so I think it's caught Congress and at least some and policymakers in general, sort of off guard, just in terms of dealing with the executive branch in the manner in which it's now the environment now is. So it's fascinating to just kind of watch all of that and see how that's all, how the cards are falling, and for good, bad, or otherwise. But I do think that we're in a time that is a bit unfamiliar in terms of what the president has decided he's going to do, regardless of what tradition or the norms used to be, and then just seeing how all that works itself out.
Well, as we mentioned before on previous episodes, that the executive branch continues, and this did not start with Donald Trump, continues to increase their power, and the Congress just seems to continue to let them do it. So that's who has to come in and kind of balance down the president's power or the Supreme Court. So, right, the checks and balances in our government have to come in. But the executive branch historically continues to get more and more power. They're voting today on the war power resolutions, which even if it passed, Donald Trump's not going to sign it. So
no, right. So there you go. Yeah. But, in terms of what we talk about here and the effects that these things have on markets, is it fair to say, we can kind of wrap up with this, but I want to give you an opportunity to talk about anything remaining that you'd like to share with the public today. But is it fair to say that the markets are taking a cautious sort of behavior right now? I mean, you don't see any massive fluctuation or reactionism that I can see. I mean, it seems like there's a little bit of ebb and flow, but we don't see a massive drop or spike or anything like that going on, or am I missing something there? Are they just kind of waiting to see?
All right, so let's talk about what happened with the since the attacks. Oil prices initially spiked, crypto flushed, crypto came back. The dollar firmed up a lot. The dollar started to firm up. I don't know if people noticed this. The dollar firmed up, gold prices went down. We had this precious metal move.
Gold
now
high for a while.
Right. It's still very high, but it's come down. So I'm like, gold's still historically high, but it's come down all time highs. Gold and silver have started to trade like kind of meme-ish now, with like meme stocks with these moves up and down. We've seen the 10-year, it dipped below, I like the 10-year treasury note. It dipped below 4%, but now it's back above 4%. So generally, if you were thinking people were running to safety, you would see the opposite, right? You would see these yields get lower because people are selling bonds, right? You're going higher because people are buying as a sign of maybe more confidence. And then as the dollar is going up, increasing their strength, you see gold go down. It's just so there are things moving, but the stock market itself, like from Monday to today and a few days, it's just been a couple of days. But if you didn't see anything, you just looked at your account Monday and you looked at today, it wouldn't really be very different at all.
Yeah. And then, of course, we can't forget the housing market, which we often talk about on here, too.
Yeah.
Mortgage rates have dipped below 5 or at 5% in a lot of parts of the country, even in places like where I am, where, they're very high comparatively to the rest of the country. But in some parts, when you get out of the metropolitan area and into the suburbs, the rates are coming down.
Yeah, mortgage rates. So another thing that we saw last week, like I said, so with the 10-year, that's why I look at 10-year is usually somewhat tied with mortgage rates. We saw the average down to like 6.09%. It was the lowest since 2022 maybe. We also saw a lot of people looking to file refinance applications. Last week was a strong week for the housing market, or as far as like activity goes. But what people realize or don't realize is that if you do refinance, you have to get about 75 basis point, 0.75 for it even makes sense to refinance. So is that spread large enough? I don't know. I think the mortgage rates are going to stay right around where they are now. Speaking in mortgage rates and supplies and tying it all back to jobs, um, because we have to have jobs in this consumer-driven economy. Secretary Besson was speaking about jobs, how they work. Say you're building a data center, right? You're building a data center, you need 3,000 people to build it. Then eventually just 3,000 people, once they build a data center, this data center is going to create, this example was 3,000 jobs or 4,000 jobs, assuming some of those people go inside that data center into their job as well. So it's looking at it can create more jobs with the housing. You're like, what does this have to do with housing? It's the same type of effect, right? These people are building houses, earn income, then they can buy houses, right? Which is an economic boom for the whole cycle when people start buying houses again. But interest rates definitely have things to do with that. The tariffs have to do with that. It's all intertwined. We haven't even spoken about Kevin Warsh or Chairman Powell since they didn't have a meeting.
Right. Yeah. So is there anything as we wrap this up, is there any last thoughts you want to share on that?
No, it'll be interesting to see if the Fed can lower rates as people expect. I think they have to stay steady for right now, stay put until they see something decisively or definitively. They will have the benefit of a little bit of time before they're meeting with the war and everything that's happening. But they have to stay diligent and look for the direction. As I mentioned with Chairman Tillis or with Senator Tillis, he's not letting anything move through the committees right now. So that stuff's locked up. So yeah, we'll just see what Powell does, how data dependent they are, because the data is kind of mixed up. And people don't realize that we're still in a partial government shutdown. So that kind of stuff plays into it all too. Like
Sure.
TSA funding being targeted when we're in a war across seas, like we need some security at home, increase homeland security, all this stuff's kind of tied into it. But
Yeah.
and the Trump baby accounts, those are
Right.
active now.
Right.
People can go sign up for those.
And you have a great video on your YouTube channel. Do check this out. I blocked some time the other day specifically to just watch this. My kids are grown, but I'm going to be a grandma at some point. Not yet. No word about yet, but I look forward to those days. He does a great job. Marcus does a fantastic job of walking you through step by step, showing you online the IRS site where the Trump baby accounts, where you sign up, what the eligibility criteria is, how you get your child signed up. So do check that out. And he's very prolific as well on LinkedIn. I know you, Marcus, I think you had a special segment and maybe that very one on LinkedIn as well. So if you're someone who spends a lot of time on LinkedIn, as I do, and Marcus does, you can also find him there as well. Marcus, great conversation as always. I know Marcus, folks, check him out on LinkedIn. He has a YouTube channel, as do I. Policy for Normal People is a free opportunity for you to promote your business. I offer that as a community service for business and nonprofit leaders to come on and talk about your mission and how your industry intersects with policymaking in this nation. And that's it for this time. Marcus, have a great week. I will see you in April.
Thanks, Christy. You have a great one as well. Check out the Main Street Meets Wall Street podcast and the Wall Street South Journal.
Absolutely. Will do. All right. Thanks. Bye-bye now.
We've covered a massive amount of ground in this special series. From the 2-hour institutional deep dive in part 1 to me and Christy's policy breakdown just now at the end of this one, you should have a much clearer picture of how this wartime economy is functioning. But remember, this is a living, breathing series. Because the world doesn't stop moving, we don't stop analyzing. Keep your eyes peeled. Next month's war report will be dropping soon. We'll be breaking down the latest escalation and how the shifting geopolitical lines are impacting your purchasing power. And remember, another good thing of the war report is that you have live sessions. So if you ever want to catch us in one, hop in, leave your comments. We'll respond to you. If you're on the go, make sure you're subscribed to the Main Street Meets Wall Street podcast. I go even deeper into these topics during my commutes, where you can go even deeper into these topics during your commutes, reviews, workouts. And if you haven't seen it yet, go back and watch the 2-hour session in part 1 to get the full context of what we discussed today. Hit that like button and subscribe to stay in the loop as this series evolves. In the comments, let me know, What policy shifts have you most concerned in the current environment? Once again, thanks for joining in this special sub-series of the Main Street Meets Wall Street podcast and Marcus Sturvett Sr.'s YouTube channel, The War Report. Part 1 was the calm before the storm. Thanks for listening to Part 2, Main Street Heart meets Wall Street Smarts.